Can you hear me? Drop a comment if you can hear me. Drop a comment if you can hear me. Can you hear me? Can you hear me? If there's anything you want us to analyze tonight, drop it in the comment space. How are you doing? Sure you had a great day. If you can hear me, drop a comment. I need to be sure you can hear me. So what pair are you considering trading next week? What pair are you considering trading next week? Have you done your homework? Which pair do you want us to analyze? First, we'll be looking at the major currency pair. But tell me in the comment space, what pair are you considering trading next week? What pair are you considering trading next week? Drop it in the comment space. I want to see your comments. I want to see your comments. What pairs are you trading? I believe you can hear me. So just go straight to business. Let's go straight to business. So the first pair we'll be looking at is GU. GU. Now, when analyzing the market, when preparing for the new week, when looking at the charts, the first thing you should identify are areas of liquidity. Okay, the first thing you should identify are areas of liquidity. Now, what is liquidity? Simply put, liquidity are areas where there are a lot of orders. Okay, it's an area where you have buy stop orders and sell stop orders, and oftentimes the institutions will want to aim for those liquidity levels before pushing price in their direction. What do I mean? For example, if you look at GBP USD, now liquidity resides at previous highs or previous low, old highs or old lows. That's where liquidity resides. For example, if you look at GBP USD, the area of liquidity on GBP USD is this. So first identify those levels. This is area of liquidity because this is a previous low, right? This is an old low. Then we also have another area of liquidity, which is this relative equal high. Okay, this area of liquidity. This is also area of liquidity. Now, price will go in two directions, right? It's either price goes up or goes down, right? So it's either price aims for the buy side liquidity or sell side liquidity for the week, this coming week. It's either price aim for the buy side liquidity or it aims for the sell side liquidity. That's the first thing you need to identify. So if your bias is bullish on euro, on GBP USD, then your target should be the buy side liquidity. That will be your target. And if your bias for GBP USD is bearish, then your target would be the sell side liquidity. But most times, before price will go to the buy side liquidity, it will clear the sell side liquidity. So if your bias on GBP USD is bullish, for example, now on Friday, there is an area of liquidity here. There is liquidity at this low. Why? This candlestick is called AMA, right? AMA, or we can call it hanging man. Now, most retail traders would have executed buy as a result of the close of this candle. They would have executed buy. Now, where would they set their stop loss? Where do you think most retail traders will set their stop loss? their stop loss will be, most will set their stop loss using the low of this candle. Okay, most will set their stop loss using the low of this candle. So before price would aim for the buy side liquidity, there is a possibility for price to hunt for the stop losses at this previous low, at this low. Are you getting me? It is possible for price to aim for this liquidity before pushing price up, before it aims for the buy side liquidity. Now, if your bias is bearish, let's assume your bias for this coming week is bearish, there's a possibility for price to aim for, there's an area of liquidity here. Okay, for those who trade candlestick pattern, this is hanging man, right? Now, those who execute sell, now after the formation of this, what is it called, hanging man, most retail traders will enter sell. Most retail traders would enter what? They will enter sell. And after entering a sell, where would they set their stop loss? Their stop loss would be the high of this hanging man. It's either they set their stop loss at the high or a few pips above the high. So if your bias is bearish for GBP USD, you should wait for price to clear the buy side liquidity before you sell. I hope you are learning. I hope you are learning. Okay, so if your bias is bearish, there's a high probability that they might want to hunt for the stop losses at this level before pushing price down. I hope you get that. So what is the bias on GBP USD for the coming week? Let's start with the weekly time frame. That's the first time frame you should start with. If you're analyzing your markets at the close of the market for the week, you start using the weekly time frame. Why do you start using the weekly time frame? You want to know the trend, the direction for the new week. And how do you know the direction for the new week? The way the close of the weekly candle would determine the direction for the new week. I hope you get that. How the candle for this week closed would determine the direction for next week. Okay, so you need to start with the weekly time frame to know the direction for the week. It doesn't matter whether you are a scalper or a day trader. You should first know the weekly direction before you switch to lower time frames, and you ensure that whatever trade you are executing on the lower time frame aligns with the higher time frame. I hope you get that. Any trade you're executing on the lower time frame should align with the higher time frame. Okay, so let's go to the weekly time frame. It's very important that you know the areas of liquidity. It is very important. Okay, so let's go to the weekly. What do we have on the weekly time frame? Okay, so you can see what we had on the weekly time frame. You can see from this day to this week, from this week to this week, you would see that GBP USD has been in a range. GBP USD has what? Has been in a range. Now you would see that this week candle tested a previous low. You can see there was liquidity. There were buy stop orders at this level. Okay, so they hunted for the stop losses at this level, and there was a strong rejection from that level. And you see what we have here looks like an hammer, and it also looks like an hanging man, right? You can call this hanging man. Now, when you see hanging man in an upward trend, it indicates change in trend from bullish to bearish. That's what it indicates when you see an hanging man. Okay, so that is what we have on the weekly time frame. Now, after the formation of this hanging man, what do we have on? Let's go down to daily. Now we'll switch to daily. Now you would see on daily, I think this was a Wednesday. On Wednesday, you can see what we had on Wednesday. Okay, you can see what we had on Wednesday. Price tested a support level. Can you see this? Price tested this support level, and you would see from this point GBP USD has been in a range, and when price is in a range, it always goes to resistance, from resistance to support, from support to resistance. That's what played out from this point. Went to resistance, came back to support, went back to resistance, came back to support, went back to resistance, and this is likely going to repeat. There's a possibility that price will what? Aim for this resistance. There's a possibility, the probability is high that price is likely going to aim for this resistance. Okay, so my bias, looking at the daily time frame now, my bias for GBP USD is bullish. Okay, my bias for GBP USD is bullish. But before I execute a buy trade, this resistance must be broken. A 4-hour or 1-hour candle must close above that resistance before I would buy GBP USD. And like I said, if I'm buying GBP USD, the next target, my TP will be at areas of liquidity. This is the buy side liquidity, and also we had this also. This is previous highs. That's where I will set my take profits. My take profit will be at these levels of liquidity. I hope you are following. Now let's go down to 4-hour. What do we have on 4-hour? Okay, you can see what we have on 4-hour. It's been in a range. Okay, it's been in a range. You can see it. You can see it on 4-hour that it's been in a range. Now, if you look at what has been playing out here, it's formed an high, formed a low, formed a new high, right? Formed a new low. What structure is that? Bullish structure, right? That is a bullish structure. Formed a high, a low, a new higher high, a new higher low. So there's a probability that to form a new higher high. So on 4-hour, the structure is bullish. On 4-hour, the structure is bullish. Let's go down to 1-hour. We'll see the structure more clearly on 1-hour time frame. We'll see the structure more clearly on 1-hour time frame. So on 1-hour, what do we have on 1-hour? So you can see what we have on 1-hour. You can see the structure clearly on 1-hour. I think at this point there was a shift in market structure at this point, right? Because this was the last lower high. This was the last lower high, right? This was the last lower high, and there was a breakout. This candlestick broke out from that high. So there was a shift in market structure at this point. So 4-hour, 1-hour, what we have is a bullish structure. Is a bullish structure. So there's a high probability that GBP USD will form a new high. But before it forms a new high, there's a possibility for it to pull back to fill this fair value gap. That's why I said if your bias is bullish, there's a high probability for price to sweep liquidity, for them to hunt for stop losses. That's the sell side liquidity before pushing price up. So here we have, this is a sell side liquidity. We have stop losses at this level. Then also we have a fair value gap here. So there's a possibility for price to pull back to fill this gap before it starts buying. So if you are considering buying GBP USD, you should wait for price to fill this fair value gap. This is 1-hour time frame. Wait for price to fill the fair value gap before you buy. You can't jump in and start buying at the current market price. If you do, you will be taking a higher risk. You would be taking a higher risk. For example, if you execute a buy from the current market price, the current market price is 1.2703. 1.2703, and the best level or the best price to use as your stop loss will be the low of this candle. This is where you want to set your stop loss. Anything above this level is not reasonable. They can easily hunt for that level, but at this level it will be difficult for them to hunt for this level. Yes, they can get there, but it will be difficult. It will be hard for them to hunt for this low. So this will be the reasonable level to use as your stop loss. So you are buying at 2704, your stop loss is at 2596. That is about 108 pip risk. You sure don't want to take that kind of risk. 108 pip risk. But if you patiently wait for price to pull back to this, if you wait for price to pull back to this fair value gap, to fill this fair value gap, your risk will reduce to maybe like 30-40 pips. Your risk will reduce to like 30-40 pips, and with that you can aim for a higher reward, right? If you're risking 30 pips, you can aim for 70 pips, you can aim for 80 pips, you can aim for 100 pips. So as a trader, you want to ensure that your risk on every trade is small compared to the reward. You need to minimize risk. That is the secret to successful trading. Your risk must be very small. You ensure that your reward is at least 2 times the risk you take on every trade. So that is my bias on GBP USD. I would be considering buying GBP USD next week, but I have to wait for price to pull back. This gap needs to be filled. Okay, price needs to pull back. And now, when price gets to that level, when it gets to that fair value gap, okay, there has to be a bullish reversal pattern. A bullish reversal pattern must form at that zone. I wouldn't just jump in because price has entered into this gap. No, there has to be a bullish reversal pattern. Some people use pending orders, limit orders. They will, for example, since you are considering buying, they will place a buy limit order, right? Yeah, they will place a buy limit order around this level. They will just look for one price and just, so if market gets there, the broker will execute the trade automatically without them being online. Do you get it? But me, I like to see what's happening on the charts, okay, live, before executing the trade. If there's no bullish reversal pattern at that zone, I would not execute the trade. I hope that is clear. I hope that is clear. If there's any pair you want us to analyze together, drop it in the comment space. Drop it in the comment space. You're all welcome. You're all welcome. I hope you are learning. I hope you are learning. Okay? So, that's it for GBP USD. My bias is bullish. Now let's move to the next pair, Australian dollar USD. What's my take on Australian dollar USD? Australian dollar USD. So let's start with the weekly time frame. So what do we have on the weekly? You can see what we have on the weekly. Okay, we'll look at GBP JPY, Mr. Chifunaya, Mr. Olodu. You're welcome. You're welcome. Okay, so you can see. I hope you guys can see my screen clearly. You can see my screen. Right? You guys can see my screen clearly, right? Can you guys see my screen? Can you see my screen? Chief Unaya, Mr. Oludu, can you see my screen? So let's go to, okay, we're on Australian dollar USD now. See what we have on Australian dollar USD. This is the weekly time frame. So you can see the first thing they did last week, I think the goal was to hunt for the stop losses at this area of liquidity, this relative equal low. Can you see that? That was what they did last yeah, we'll look at gold. Entando, we'll look at gold in a few minutes. So the first thing they did last week was to hunt for the stop losses at this previous liquidity, at this relative equal low. Can you see that? Can you see that? And if you go back, you would see that that level was also a support level. You can see it. Can you see that? So price tested that level and there was a strong rejection from that level. Can you see that? There was a strong rejection from that level. Now, after looking at the weekly time frame, the next thing is to switch down to daily time frame. I'm teaching you guys how to use multiple time frame analysis, which is also referred to as top-down analysis. You don't just focus on one time frame when you're analyzing the market. Okay, looking at different time frames, using different time frame analysis gives you an edge over someone who is just focused on one time frame. Okay? Few minutes, please. I don't know why it's displaying like this. Few minutes. Maybe I need to change the settings. Few minutes. This is supposed to be landscape, but this is showing this is portrait. It's supposed to be landscape. Is it portrait at your hand or landscape? Is it landscape or portrait? Please let me know. This is supposed to be landscape and not portrait. So okay, so okay, so they've hunted for the stop loss at that level. That level is a key support level. So let's go down to daily, right? Let's go down to daily. So on daily, what do we have on daily? What do we have on the daily? On the daily, you can see we have a bullish setup, right? We have a bullish setup. Okay, it's landscape. Okay, this is a bullish setup. Can you see this? This looks like an hammer but not a valid hammer. Okay, it looks like an hammer but not a valid hammer. A valid hammer, the wick below is supposed to be 2 times the body. Okay, so this is not a valid hammer. As you can see, the wick and the body is like the same ratio, right? So in this case, we have to identify the high of this previous bearish candle. Okay, so you can see, so currently the market closed at the high of this previous bearish candle. If this candle had closed above the high, we will conclude that we have more buyers in the market and there's a high probability for price to keep going up. Okay, so there will be high probability. So before you buy, you should wait for a candle to close above the high of this bearish candle. Before you buy, wait for a candle to close above the high of this candle. Now, at this relative equal low, we have stop loss orders at these lows. We have buy limit orders at this low. Please, we would have to manage this. We would have to manage this. I don't know why it's supposed to be landscape, or it's portrait format. It's supposed to be landscape. I don't know if I go off now it will affect the streaming. I would have to create a new link. So please, let's just manage this. Okay, let's manage this, please. I'm really sorry for this. So at this relative equal lows, we have stop losses at this level, which is a buy limit order. Why? A lot of retail traders will say they are stop loss at this level. So if we are looking for buy, we should wait for sweep for the liquidity at these lows to be cleared. Okay, you should wait for these lows to be cleared. Now it's possible the lows, the market, they might not push price to these lows. Okay, so what you need to do is go down to lower time frame and identify a fair value gap on lower time frame, maybe 1 hour or 4 hour. Okay, that's what you should do. Okay, so let's go down to 4 hour. What do we have on 4 hour? We should have a bullish reversal pattern on 4 hour. There has to be a bullish reversal pattern on 4 hour. Let's go to 4 hour. Can you see what we have here on 4 hour? We have, this is an hammer. This is an hammer. So it's possible price will not pull back to this previous low. Reason is this: it is possible price will not pull back to this low. Reason is that this hammer that formed there, you can see the first thing they did was to hunt for the stop losses at this previous low. Can you see that? So it's possible price will not come back to sweep liquidity at this low because they've already achieved that with this candlestick. So this is where price is likely going to pull back to. There's a fair value gap here. Can you see this? There's a fair value gap here on 4 hour. Can you see that fair value gap? So price is likely going to pull back to this fair value gap. So that is where I would be considering buying Australian dollar USD. That is where I will be considering buying Australian dollar USD. Please help me manage the screen. Help me manage the screen. This is not what's supposed to be displayed. But please just let us manage it tonight, please. So for me to buy, price needs to pull back to fill this fair value gap. But let's go down to 1 hour. Maybe there's still a fair value gap below that of 4 hours. So let's see. Do we have a fair value gap on 1 hour before that on 4 hour? There is no fair value gap here. So this is where price is likely going to pull back to before it continue with its bullish movement. I hope that is clear. I hope that is clear. Also, if you look at this, you would see that there is a shift in market structure on 1 hour time frame. This was the last lower high on 1 hour time frame. Can you see this? This was the last lower high, and you would see that this candlestick here broke out from that high. So there is a shift in market structure on 1 hour time frame. So we should wait for price to pull back to fill this gap before we buy. That's my take on Australian dollar USD. I am bullish on Australian dollar USD. So let's look at, someone said we should look at GBP JPY, Euro USD, and CHF JPY. So let's look at GBP JPY. GBP JPY. So let's start with the weekly time frame. So you can see it is obvious that GBP JPY is bullish, right? It is obvious on the weekly time frame that GBP JPY is bullish. Can you see that? The structure you have on the weekly time frame is a bullish structure. Is a bullish structure, but I wouldn't advise that you jump in and start buying at the current market price. Wait for price to pull back to a support, okay, or to a fair value gap before you buy. Don't jump into buy. This is where the buy started. Buy started from this point and is currently at this point. Why would you want to buy at this price? Buying at this price means you have to take high risk, right? So it will not be reasonable to buy GBP JPY at the current market price. Wait for price to pull back. So let's go down to daily. What do we have on daily? So you can see on daily, you can see what we have on daily. Friday candle close as what? A spinning top, which indicates change in trend from bullish to bearish. Can you see that? It's a spinning top. So there's a high probability that price will pull back to this resistance zone support. And this is the last higher high, right? This is the last higher high. So it is likely price will pull back to fill this gap, okay, before it continues with its bullish move, okay. So it's possible price will come back to fill this gap. Or you could also apply your Fibonacci, okay, take it from the recent swing low, okay, to the swing high. Wait for price to pull back to discount, okay, which is below level 50. Wait for price to pull back to discounts before you buy, okay. So GBP JPY is bullish at the moment. That is long term is bullish, but on a daily time frame is bearish. If we also go down to, let's see what we have on 4 hour. So on 4 hour also it is bearish, okay, it is bearish. You can see here we had a spinning top, then the next candle closed as a shooting star, right? That's the reason 4 hour is bearish. Can you see? So daily and 4 hour is bearish. So what am I looking out for on GBP JPY? Now there should be a shift in market structure, and that will occur if this low, this low is cleared, okay. So if 4 hour candle closes below this low, Okay, that's when I'll be considering buying. 4-hour candle should close below this low, then there should be um, a retracement or a pullback to fill a fair value gap. Okay, I hope you are following. I hope you are following. If 4-hour candle closes below this low, that's a shift in market structure. But you don't just jump in and start selling. You should wait for a price to pull back, fill a fair value gap before you start selling. I hope that is clear. I hope that is clear. I hope that is clear. Okay, so that's my take on GBP/JPY. GBP/JPY long term is bullish. Long term is bullish. If you are selling, you're trading the retracement. Okay, you are trading against the trend. So you have to be careful when you're trading against the trend. You have to be very conservative. Okay, when you're trading against the trend, your risk reward will be very low. Risk reward will be very low. You cannot be aiming for 1:5 risk reward if you're trading against the trend. It is when you're trading along the trend, you can aim for 1:4, 1:5, 1:3. But if you are trading against the trend, your risk reward should be 1:1 or 1:2. I hope that is clear. So that's my take on GBP/JPY. And if GBP/JPY is bearish, there's a high probability CHF/JPY would be bearish. Okay, CHF/JPY would be bearish. But let's just look at the charts. Let's just look at CHF/JPY. Okay, I don't have CHF/JPY on my list. Okay, let's look at which other pair? Euro USD. Euro USD. Let's look at Euro USD. So we'll start with the weekly time frame. So what do we have on the weekly time frame? So on the weekly time frame, I think what they did last week was to hunt for stop losses at this low. You can see this previous low. Okay, the low of this candle. I think what they did was to hunt for the stop losses at this low. Okay, so if you go back here, you would see we had a resistance here. So this could be our demand zone for Euro USD. Okay, so my bias for Euro USD is bullish. My bias for Euro USD is bullish for the coming week. It is bullish for the coming week. So they hunted for the stop losses at this previous low. Liquidity was cleared at this previous low. We had a previous support, resistance on support here. So let's go down to daily. What do we have on daily? So you can see on daily we have a bullish reversal pattern. Can you see that? Can you see that? This is a bullish reversal pattern. Can you see this now? After the close of this candle, we had a support here. Can you see this? Okay, that's a support. If you go back, you would see we had a support here. I think price tested this support. Can you see that? Can you see? At this point, it was a support. Can you see it? So price tested that support and there was a rejection from that level. So on daily, the formation we have here is a bullish setup. This is a bullish setup, but before you buy, you should wait for a candle to close above the high of this bearish spinning bottom. That will be the best time to consider buying. If you want to buy Euro USD next week, wait for a candle, preferably 4-hour candle, to close above the high of this bearish candle. I hope you're following. Okay, wait for a candle to close above the high of this candle before you consider buying. I hope that is clear. So my bias for Euro USD this coming week is bullish. It is bullish. Okay, that's my take on Euro USD. Which other pair? Okay, someone said we should look at gold. Let's look at gold. Okay, so this is gold. Let's start with the weekly. So I think last week there was a run on liquidity at this previous low. That was the previous week low. Okay, it's a run on liquidity, and if you go back here, you would see that level was also a previous resistance level, turn support. Can you see that? It was a previous resistance level, turn support. Also, after the close of this bullish candle, a support was formed. Can you see this? Can you see this? So we had a demand zone at this level. This was a demand zone, and price tested that demand zone, and there was a strong rejection from that zone. So after identifying this demand zone on the weekly time frame, we would go down to the daily time frame. On the daily time frame or 4-hour time frame, there has to be a bullish reversal pattern. Okay, we must find a bullish reversal pattern on daily time frame or 4-hour time frame. So let's go down to daily before we go down to 4-hour. What do we have on daily? So you can see what we have on daily. This is a bullish reversal pattern. Okay, but before we buy, a 4-hour candle should close above the high of this bearish candle. That will be the best time to consider buying. A bullish candle should close above the high. 4-hour or 1-hour candle should close above the high of this bearish candle. That is when we should consider buying gold. Okay, now let's go down to 4-hour. There has to be a bullish reversal pattern. Let's go to 4-hour. Let's go to 4-hour. 4-hour, what do we have on 4-hour? Some people will call this a marubuzu, right? This is a marubuzu. This is bullish marubuzu, right? This is bullish marubuzu. Okay, so let's go to 4-hour. What do we have on 4-hour? So you can see on 4-hour. Okay, you can see what we have on 4-hour. At this point, you can see we had a spinning bottom. Can you see this? We had a spinning bottom. Okay, this is where price started going up. A spinning bottom. The next candlestick closed bullish, and you can see the market is currently trading above the high of this previous bearish candle. That's a confirmation that we have more buyers in the market. There are more buyers than sellers. It indicates that there are more demand than supply. Okay, there is more demand than supply, and when there is more demand than supply, you should expect price to go up. So price started going up. You can see after this candlestick closed above this high, confirming that we have more buyers in the market, confirming that there are more demands than supply. What happened? We can see price went up. Can you see this? Now on 4-hour, we have a bearish reversal pattern here on 4-hour. So this is likely going to play out before the weekly and the daily pattern will play out. So this pattern on 4-hour is likely going to play out. So we should expect price to pull back to fill a fair value gap. And where is the fair value gap on 4-hour time frame? There is a fair value gap. This is a fair value gap. Okay, this is a fair value gap on 4-hour time frame. So it's likely price will pull back to fill that gap before going up. I hope you get that. So someone is asking, what is a fair value gap? We have these 3 candles here, right? 1, 2, 3. The gap in between the high of this candle, this first candle, and the low of the third candle is what we call a fair value gap. That's a fair value gap. Let me show you another example of a fair value gap. Okay, let me show you another example. I think we have one here. There was one here. You can see the gap in between the low of this doji, the gap in between the low of this doji, this first candle, and this third candle, the gap in between them is called a fair value gap. Okay, the gap in between the low of this doji and the high of this doji is called fair value gap. I hope that is clear. Is there any other pair you want us to analyze? Please drop it in the comments. If you have any question, please drop it in the comment space. Please drop your questions in the comment space. So which other pair do you want us to analyze? Let's look at USD card. USD card. Okay, so you can see on 4-hour. Let's start with the weekly. So you can see what we have on the weekly time frame. That is a shooting star, right? That is a shooting star, and shooting star indicates change in trend from bullish to bearish. Shooting star indicates change in trend from bullish to bearish. Okay, now another thing you need to identify on the weekly time frame, we had a resistance here. You can see this was a resistance, and if you go back here, we also had a support here which became a resistance. So price penetrated this previous resistance but couldn't hit this resistance. Okay, and after hitting this previous resistance, you could see there was a strong rejection, and that candle closed below that previous resistance. That tells you that there is more supply than demand. Traders are more willing to sell from that price, from that level. So supply at that point exceeds demand, and there's a high probability for price to drop. I hope you're following. Okay, Mr. Emmanuel, you just joined. We've looked at GBP USD, so we'll look at USD CHF. Okay, I'm not too okay with this display. I'm not so satisfied with this display. Please let's just manage this today. Okay, I believe this won't repeat the next time. Okay, please let's just manage this. So weekly, you can see what we have there is a shooting star. Shooting star tested a previous resistance level, so that tells us that this coming week there's a high probability for USD CAD to sell. So like I said, always identify areas of liquidity. Okay, so if we are selling, we are aiming for the next area of liquidity, which is this low, okay, and this relative low. Okay, so should we just jump in and start selling when market opens? No, don't jump in and start selling, because we have a buy side liquidity here, this previous high. As you know, most retail traders would have jumped in and start selling. And where would they say their stop loss? Their stop loss would be at this level. Their stop loss will be at this level. So they might want to hunt for their stop losses before pushing price down. So if you're considering selling, wait for price to push up. It might not get to this level, but there's a high probability they might want to hunt for stop losses. There are a lot of stop losses around these areas. They want to hunt for those stop losses before pushing price down. So patiently wait. Don't jump in and start selling. So let's go down to daily. What do we have on daily? You can see what we have on daily. We already have a bearish reversal pattern. Can you see this? This is a bearish reversal pattern. We had a shooting star here. The next candle still closed bearish, and this candle engulfed this shooting star, this bullish candle. Can you see that? So this is a bearish reversal pattern on daily. So you can see what we have on the daily aligns with what we have on the weekly time frame. Okay, we have a bearish setup on the weekly, and also on the daily we have a bearish support setup. So let's go to 4 hour. What do we have on 4 hour? There should be a shift of market structure on 4 hour. Can you see that? You can see there's a shift in market structure on 4 hour. Can you see this shift of market structure occurred here? This was the last higher low. Can you see it? And this 4 hour candle has broken that structure. Can you see? So there's a shift in market structure on 4 hour time frame. Now, after a shift in market structure, price is expected to pull back to fill a fair value gap. Okay, price is expected to pull back. So you don't want to jump in and start selling at the current market price. Wait for price to pull back. This is where price started dropping. Why would you want to sell at this current market price? Are you willing to take that high risk? Are you willing to take that high risk? Personally, I don't think it's reasonable to take that kind of risk. Okay, because if you are selling from this current market price 3429, your stop loss will be at this level. That's about 120 pips risk. That's 120 pip risk. You don't want to take that kind of high risk. So you should wait for price to pull back. You could just even apply Fibonacci. Okay, apply Fibonacci, wait for price to pull back to premium. Okay, wait for price to pull back to premium, which is above level 50. That is area you should consider selling. Price should pull back to a premium, which is above level 50. That is where you should look for your bearish reversal pattern. Okay, ensure that a bearish reversal pattern forms above level 50 before you sell. Okay, I hope you get that. Wait for a bearish reversal pattern to form at a premium level before you start selling. The current market price is not a good price to start selling. I hope you get that. Okay, if you wait for price to pull back above level 50, your risk will be very low, maybe between 30 and 40 pips. 30, 40 pips, and you can aim for 70, 80 pips. Hope you get that. Okay, so let's look at USD CHF. USD CHF, I think that will be the last instrument for tonight's session. Unless you have any other instrument you want us to analyze, or you have any question that needs to be attended to. USD CHF, as you know, USD CHF is negatively correlated with Euro USD. So if we're looking for buy opportunity on Euro USD, we should look for sell opportunity on USD CHF. Both pairs are negatively correlated. By that I mean 70 to 80% of the time these pairs will move in opposite direction. Okay, it's very important that as a trader you know how these pairs correlate. Okay, it's very important you know how these pairs correlate. This would help you in minimizing risk and also managing risk in trading. Most traders don't know how these pairs correlate. If you know how pairs correlate, you would understand that there is no need for you to be trading all instruments. Okay, there is no need. For example, GBP USD and Euro USD are positively correlated. So if you see a buy opportunity on GBP USD and you see a buy opportunity on Euro USD, why not risk all on GBP USD instead of executing buy on GBP USD and executing buy on Euro USD? If you lose GBP USD, there is a high probability that you will lose Euro USD. So instead of taking the risk on both pairs, you can just take the risk on one pair. Or if you see a buy setup on GBP USD and you see a sell setup on Euro USD, you either take the buy setup on GBP USD or you take the sell setup on Euro USD. If you decide to buy GBP USD and at the same time sell Euro USD, there's a high probability that at the end of the day you will break even, because one will be profit, the other will be loss. So at the end of the day you will break even, you wouldn't make profit. So you need to know how these pairs correlate. It's very important. Most traders don't know this, and that's why they keep losing. They keep losing. It doesn't make sense when you are buying GBP USD, you are selling Euro USD. GBP USD is negatively correlated with USD CAD. You cannot be buying GBP USD and be buying USD CAD at the same time. Okay, 70 to 80% of the time these pairs would move in opposite direction. It is only when they are fundamentals, only when there is a major news. For example, we have GBP USD and USD CAD. If the news favors CAD, for example, USD CAD could sell and GBP USD could also sell, because the news that was released was for CAD. Okay, it was for CAD. So it's possible that immediately the news was released, USD CAD would sell and GBP USD is likely going to sell too. Okay, because the CAD news that was released would have a higher impact on USD CAD. I hope you get that. I hope you get that. So it's very important that you know how this pairs correlates. Very important. So USD CHF. Let's look at USD CHF. So I'm expecting to see a bearish setup on USD CHF. So you can see what we have here. This is 4 hour, but let's start with the weekly. Let's start with the weekly. You can see how the weekly closed. Okay, see how the weekly closed. We have we had the resistance here. Can you see this? This was a previous resistance. Then if you go back here also, we had a support here which became a resistance. Can you see that? Can you see that? This was a previous resistance storm support. So price tested that resistance level, and you can see there is a rejection. Can you see that? There's a rejection from that resistance. Can you see that? There's a rejection from that resistance. So if we go down to daily, we should see a bearish reversal pattern on daily. If we can't find a bearish reversal pattern on daily, we should find a bearish reversal pattern on 4-hour time frame. So let's go to daily. What do we have on daily? Can you see the pattern we have on daily? That is a doji. That is a doji. Also on the daily time frame, you would see that we have this is a resistance. Can you see this? You can see there was a resistance at this level. Price tested that resistance and there was a rejection from that level, and the candlestick that formed there is called doji, which indicates that the trend is going to change from bullish to bearish. It indicates that the buyers are becoming weaker, they are getting exhausted, and sellers are showing up strong in the market. Okay, that's what a doji indicates, weakness. Okay, the buyers are becoming weaker and the sellers are showing up in the market, so there's a high probability for price to drop. So let's go down. So we have a bearish reversal pattern on daily. So let's see what we have on 4-hour. What do we have on 4-hour? 4-hour. So you can see what we have on 4-hour. Can you see what we have on 4-hour? So we had two doji candles. Even before the formation of the doji candles, we had an hanging man here and hanging man here. Now, after the formation of this hanging man, if this next candle had closed below the low of that doji, of that hanging man, there's a high probability that price will keep dropping from that level. But you would see that the next bearish candlestick that closed didn't close below the low of this hanging man. Can you see that? But if this candle had closed below this low of this hanging man, there's a high probability that price will keep dropping from that level. But because it didn't close below it, that was why you'd see that price went back up. Can you see that? Price went back up, hunted for the stop losses at this level, because most retail traders would have executed sell, right? Most retail traders would have executed sell after the close of this bearish candle, because that was what they were taught, right? That's what they were taught. After the formation of an hanging man, wait for the next candle to close bearish, then sell. So most retail traders would have entered sell, and they will have their stop losses at this level. So what they did with these candles was to hunt for the stop losses at this level before they start selling. So if you want to sell next week, wait for a bearish candlestick to close below the low of this hanging man. Now, if you look at this doji that formed here, it's very close to the low of this hanging man that formed here. Can you see that? The question is, why did this candle, the low of this candle, why is it same with the low of this hanging man? That tells you that level is a key level, and if that level is broken, there's a high probability for price to keep dropping. There's a high probability for price to what? To keep dropping. Now, after 4 hours, there has to be a shift of market structure on lower time frame. So now we'll be going to 1 hour or 15 minutes to ensure that there's a shift in market structure on those time frame. Okay, so let's go to 1 hour. So you can see, so on 1 hour, where do we have the most recent lower high? The most recent higher low. Higher low, I think this is it. This is where we have it on 1 hour. This low, I think, yeah, this is the most higher low. Okay, higher low. So we should wait for price to break that low. Few minutes, please. What's happening here? Few minutes, please. Okay, so we should wait for price. Sorry for that. We should wait for price to close below this low. Okay, this is where we'll confirm shift of market structure on 1 hour. Wait for a candle to close below this low. After a candle close below this low, wait for pullback, wait for price to pull back to fill a fair value gap. As you can see, I think on 1 hour we have This is a fair value gap on 1 hour. Can you see this? This is a fair value gap on 1 hour. We should wait for price to fill this fair value gap. After a shift in market structure, price should pull back to fill that gap. So that's the area I would consider selling USD CHF. I hope that is clear. I hope that is clear. I hope that is clear. Is there any other pair you want us to analyze? Is there any other pair you want us to analyze? I'm really sorry for the poor display. I'm really sorry for the poor display. Now, what I will do, I will drop a video on each of these currency pairs later on my YouTube. I will analyze maybe on Monday, on Sunday evening, or on Monday. I will do a short video on each of these pairs. Okay, so just ensure that you subscribe to the channel and also like the stream so that whenever I drop those videos, you'll get notification from YouTube. Ensure you subscribe. If this is your first time of participating in the class, ensure you subscribe. So I'm going to drop short videos on the different currency pairs. Okay? Ensure you are subscribed to the channel. Any other question? Mr. Chifunaya, Mr. Emmanuel, Mr. Olodu, if you're on the stream and you're yet to comment, I would like to know who is on the stream. Okay, I can only see Mr. Olodu, Mr. Chifunaya, and Mr. Tando. Mr. Tando, okay, I think, okay, Mr. Tando, we've looked at gold. Any other question? Any other question? Any other question? Now, for those of you that have not joined my the WhatsApp group, please request to join the WhatsApp group, because most times before the live session on Tuesday, Wednesday, and Thursday, I drop some trade calls, some videos on the WhatsApp group. Okay, so please request for the link to join the WhatsApp group. Okay. Okay, so please be on the WhatsApp group. A lot is happening on the WhatsApp group. A lot is happening on the WhatsApp group. Okay, you need to join the WhatsApp group. Any other question? Any other question? Any other question? Any other pair you want us to analyze together? Let me know. Let me know. We've looked at USD CAD. We've looked at USD CHF, GBP USD, gold, Euro USD, Australian dollar USD. That is not possible on YouTube, Mr. Emmanuel. If you can type it, that will be okay. Or you send me a message on WhatsApp after the class. Okay? If you don't mind, just type the question. Any other question? Any other question? Any other question? General questions in Forex trading, risk and money management, trading plan, psychology. Please get serious with your trading business. Okay? Get serious with your trading business. Study, study, study. Okay? Don't let it be that when you come for classes, that's the only time you look at the charts. You need to spend a lot of time, studying the charts. If you want to be very good at trading, you can see how I'm analyzing the market without using any indicator. It's because I've spent hours, I've spent years studying the charts. That's why I don't need indicators on my charts. I trade pure price action. Pure price action. I don't need indicators. Okay, so if you want to be a very profitable trader, you have to spend time on the chart. You have to spend hours. As experienced as I am, I still spend not less than 3 hours, not less than 3 hours every day studying. Not less than 3 hours, as experienced as I am. So if you are new to trading, you should even spend more time. When I started trading, I was spending not less than 8 hours on the charts when I started trading. Okay, so you've got to be serious with your trading business. Okay, like someone said, if you treat trading as a part-time, you will make part-time money. You will make part-time money. But if you treat it as a business, as a full-time, okay, you will make full-time money. A lot of you are treating Forex, your Forex business, as a part-time business. Yes, Mr. Emmanuel, always wait for shift in market structure. Wait for shift in market structure. After the shift in market structure, wait for price to pull back to fill a fair value gap. Most times, a fair value gap will be created before the shift in market structure. Okay, so after the shift in market structure, wait for price to pull back to fill that gap it created before you sell. Same applies for buy. If you want to buy, after the shift in market structure, wait for price to pull back to fill that fair value gap before you buy. I hope that is clear. So if you're a day trader, for example, um, let's say you have an AMA candlestick formation on daily. Let's say the candlestick formation, the pattern is on a daily time frame. After identifying that pattern on a daily time frame, go down to 4 hour. On 4 hour, you should also have a bullish. For example, let's say you want to buy. Okay, AMA is buy. So go down to 4 hour. On 4 hour, you should also have a bullish reversal pattern on 4 hour. So the formation on 4 hour must align with the formation on the daily time frame. Okay, so once that is confirmed, then you go down to maybe 1 hour or 15 minutes. Wait for a shift in market structure on 1 hour or 15 minutes. After the shift in market structure, wait for price to pull back to fill the fair value gap that was created before the shift in market structure, before you buy. Now, if you don't have the patience, if you can't wait for price to pull back to fill the fair value gap, you can execute a buy trade or a sell trade. You can execute a trade, but let's say you want to risk $10 on that trade, or let's say you want to risk $20 on that trade. If you don't want to wait for price to pull back to fill the fair value gap, I'll advise that you risk half of what you're supposed to risk on that trade. So for example, if your risk is $20, if the risk you want to take on the trade is $20, you can go in with $10 first. You can go in with $10 first. Then when price now pulls back to fill the fair value gap, you can now risk the remaining $10. I hope that is clear. I hope that is clear. Let me go back to USD card. Let me see USD card. Let me see USD card. Okay, so our bias on USD card is bearish. I said wait for price to pull back to a fair value gap. There is a fair value gap on USD card. Now, if you can't find the fair value gap, just apply your Fibonacci. If you can't find the fair value gap, apply Fibonacci from the swing high to swing low. Wait for price to pull back to a premium level before you sell. Simple. Okay, if you can't find fair value gap, just wait for price to pull back to premium, which is above level 50, before you sell. Okay, Mr. Peps. Okay, Euro JPY. I think we've looked at, okay, Euro JPY. GB JPY is bearish, so we should expect a bearish move on Euro JPY too. Okay, but let's just look at the charts. Okay, so you can see it. Do I need to shalaye? Do I still need to shalaye on this? Let's go down to weekly first. Let's start with the weekly. So what do we have on the weekly? Okay, so this is an high. Okay, so this is high, right? Now I want you to notice something here. This previous hanging man, or you want to call it doji, okay? Hanging man or doji, you can see. Let's identify the low. Can you see? Let's identify the low. Can you see the low? So you can see price tested that zone. Can you see that? And what we have here at this point, this is an engulfing pattern. This is weekly time frame. Engulfing pattern on a weekly time frame. Can you see this? So this indicates change in trend from bullish to bearish. Now, if you apply Fibonacci 2 from this weekly swing high to this swing low, you can see also that price is currently at premium. Yes or no? Can you see it? True or false? You can see price is also at premium. Can you see that? So that is it on the weekly. So this is Euro JPY, right? Okay, so now let's price at premium. So when price at premium, what will be our expectation? There should be a pullback. Though the long-term trend is bullish, now that price is at premium, you cannot buy at premium. You cannot buy at premium. You should wait for price to pull back to a discount. Okay, so though the long-term trend is bullish, we should wait for price to pull back to premium before we look for a buy. Hadn't been this candle, this weekly candle, closed below this low, we would have considered selling. That would be a shift of market structure. Or let's say this low. Can you see? There would have been a shift in market structure if a candle closed below the low. I think this is the last low, higher low. This was the last higher low. If a candle had closed below this low, any of this weekly candle had closed below this low, we would have said, okay, there's a shift in market structure. But you can see that there has been a strong rejection from that level. Can you see that? There has been a strong rejection from that level. Can you see that? So let's go down to daily. So you can see what we have on daily. This is a bearish reversal pattern on daily. This is a bearish reversal pattern on daily. But the long-term trend is bullish. So if you are selling, you should know you're trading against the long-term trend. What you're trading is the pullback. Okay, there's nothing wrong in trading pullbacks, but you just have to know what you're doing. When you are following the trend, you know you are following the trend. When you are trading pullback, you know you are trading pullback. So that you know how to set your risk reward. Okay, you should know what you're doing. So we have a bearish reversal pattern on daily. This is a spinning top. Let's go down to 4 hour. So on 4 hour, you can see here on 4 hour we had a shooting star. The next candlestick closed bearish, but it didn't close below the low of this last bullish candle before the formation of that shooting star. Can you see that? It didn't close below the low of this bullish candle. If this candle had closed below the low of this last bullish candle before this shooting star, there's a high probability that price would have started dropping from that level. Price would have gone down from that level, but you can see there was a rejection from the previous low of this bullish candle. You can see that's why price went back up. And I think the plan is to hunt for stop losses at this level. A lot of retail traders would have entered sell, and their stop losses will be at this level, which is a buy stop order. So they might want to hunt for the stop losses at this level before pushing price down. So if you are considering selling short term based on the candlestick formation we have on daily and 4 hour, you should wait for run on liquidity, the buy side liquidity, before you sell. And there should also be a shift in market structure on 1 hour or 15 minutes time frame. Let's go to 1 hour. So you can see what we have on 1 hour. So you can see price has pulled back. We have a good setup on Euro JPY. You can see price has pulled back, and I think they want to fill this gap. They've not filled it, right? They've not filled that gap. So They want to feel, okay, this is the fair value gap on 1 hour. Okay, so price already at that level. You could also apply Fibonacci. If you can't identify fair value gap, just apply your Fibonacci from the swing high to swing low on 1 hour. So you can see price is currently at a premium. Okay, they might still want to push the price up. Okay, so okay, let's go to 15 minutes. I think there will be a fair value gap on 15 minutes. Okay, so let's go to 15 minutes. So you can see on 15 minutes, okay, you can see this is a fair value gap on 15 minutes. So you might want to wait for them to fill this gap before. Okay, so this is a fair value gap on 15 minutes. We also had a fair value gap here. Okay, this is another fair value gap, the low of this candle and also the high of this candle. Okay, so you should wait for this gap to be filled. Okay, wait for, you can see they've not filled those gaps. Wait for that gap to be filled. Excuse me. Wait for the gaps to be filled before you sell. Now, if you decide you want to sell from the current market price, you don't want to wait for price to pull back to fill these gaps. You know your stop loss should be at this previous high. Your stop loss should be at this previous high. So if you decide, okay, I don't want to wait for price to pull back to this level before I sell, calculate the risk. This is 161.41 and this is 161.86. That's about 45 pip risk. Okay, 45 pip risk. If you are okay with that, you can go in and execute the trade. 45 pips, and like I said, you can split your risk. Okay, on the first trade, if you are risking $20, for example, you can execute $10 on this first trade. If price pulls back, okay, to fill this gap, you can go in with the remaining $10. I hope that is clear. That is how to manage risk. Or you go in with your $20, okay, and hope that price does not get to this SL. I hope that is clear. So that's my take on Euro JPY. Long term is bullish, but short term is bearish. So on 15 minutes, I think on 15 minutes, let's see. I think there was a shift in market structure here. You can see this. I think there was a shift in market structure here, right? This was the last higher low. Okay, this was the last higher low, and you can see the market traded below it. So price is trying to pull back to fill these fair value gaps before it continue selling. Okay, anything that makes markets breaks these gaps, close above this gap, anything that make price break these gaps, there's a high probability that price will keep going up. There's a high probability that price will keep going up. If a candle, let's say 4 hour, closes above these gaps, then there's a high probability that price will keep going up. Just click on edit, Mr. Olodu, click on edit. Remove those 67.8 or all those other ratios. You can remove them. You can see I just selected 100, 50 and 0. Okay, so just edit your Fibonacci tool. Oh, I think we've covered a lot. I want to appreciate you all for your participation in tonight's session. The live stream holds on Tuesday 10 a.m. Tuesday, Wednesday and Thursday 10 a.m. Tuesday, Wednesday and Thursday 10 a.m. and like I advise, subscribe to the channel so that whenever I come online, you would receive a notification from YouTube. Ensure you subscribe and also share the link with your loved ones. Friends are interested in learning how to trade Forex. Let them come and learn for free. In some of those live streaming sessions, I will be teaching you strategies that you can use to analyze the market, technical strategies. So let them come and learn for free. You don't want them to go pay thousands of naira to learn how to trade. That money they will use to learn how to trade, let them use it to start live trading and start making money from the market. Share the link with your loved ones. Share the link with your loved ones. Share it on your status. Some of your friends have interest in learning how to trade. Okay, they have interest, they want to learn how to trade, but they don't know where to go learn how to trade. Don't let them fall into the hands of scammers. Okay, don't let them fall into the hands of scammers. Let them come and learn for free. The things I teach you for free here is worth thousands of naira. Some of you that are on this stream, some of you paid to learn Forex. People paid. You know how much it costs you to pay, for one-on-one training. So please let them come and learn for free. I appreciate you all for participating in tonight's session, and I wish you guys a wonderful night, and I pray that next week will be a profitable week for all of us. It's going to be a profitable week for all of us. Okay, just ensure that you don't get greedy, don't over leverage, ensure that you stick to your trading plan. And if you are participating in this class and you've not learned the basics, please show up for the basic sessions, which holds on Thursday and Friday 8 p.m. Okay, if you are new to trading, ensure you show up for the basic classes, which holds on Thursday and Friday 8 p.m. Okay, if there are no questions, I think I would have to end the meeting. Good night. Good night. If you have any question, you can send me a message on WhatsApp. Okay, let me drop my WhatsApp number. You can drop me a message on WhatsApp if you have any question. Drop me a message on WhatsApp. You need to be on the WhatsApp group. You need to be on the WhatsApp group. A lot is happening on the WhatsApp group. Okay, my number is 080 378 36189. I repeat, 080 378 36189.